Hi, everyone, and welcome to today's live stream. Hello, everyone, and welcome to today's live stream. I am Tammy DaCosta, and today, once again, we are going to look at just what's happening in markets, not only for crypto, but just for markets as a whole. Now, what we need to realize, well, for those that have been following markets, I think it is clear, or you would realize that yesterday was not a very pretty day. And that is basically just for markets as a whole. There was a lot of a big sell off, and we will turn to when we look at the screen, we will basically just go through that and see exactly what some of those causes are and where do we actually go from here. So let me just look at, I seem to have lost my presentation here. Okay, let me just share my screen and then we are going to look there and basically see what is going on. Okay, so if we look at Bitcoin and we look at price action, we can see today prices are up. Okay, this is on TradingView, but we can see that there has been a positive shift of 3.71%. And yesterday, like I said, across the board, there was a major sell-off, not only at crypto, but even if we look at, for example, the NASDAQ 100, and we look at tech stocks, they were really, really looking brutal yesterday. And now we're seeing even the NASDAQ futures and the S&P 500, we are seeing that shift, or we're seeing a push towards the upside or a potential rebound. But whether that will last or not, now I think that's the key question. And that is obviously what we want to find out, because we want to know, as the title says, is this a crypto crash? Is there further downside expected? Or is this a potential buying opportunity? So let's go through markets. Let's start with Bitcoin since we are here already. And then let's look at some of the price actions, some of the key levels. And once okay, so let's just go to CoinW to see an overall picture quickly. And we can see there. So overall, if we're looking at futures markets in particular, we can still see, and we need to realize as well, when these changes, because different exchanges obviously have different times in which they focus or look at the 24-hour change. So currently on CoinW, if you look at the futures, we can see these are, so Bitcoin, Ethereum, Litecoin, still trading lower. But then if we go to TradingView, there is a bit of a delay in the prices. But if we look at the price action for yesterday, we can see, okay, so prices really, really, as I said, there was a lot of fear that was going through markets. We saw that prices actually hit a low. Well, this was yesterday, according to TradingView and the CME exchange. So that is what the futures exchange where Bitcoin is now regulated. And we can see there was a low of 77,530. And today there was a bit more pain of 76,735. So since then, we have seen a rebound in prices, but whether it can hold or not, that is the key question. Now, when we're looking at price action, now obviously, like in the economic front, or if we're looking at fundamentals, there are factors that have been driving the current shift in sentiment. And the big thing is the tariffs and the trade wars. So that is a key theme. And then we can look at economic data as well. And we can see that even if we look at the non-farm payroll report, and that was on Friday, that's the indication of the number of new jobs added to the US economy in the previous month, that did slightly miss consumer expectations or analyst expectations. And that obviously, combined with everything else, all the factors that we'll be looking at, has now created a lot of fear and indecision in the market. If we now look at something like, I was looking at volatility earlier, and if we just look, for example, let's look at the crypto heat map. Over here, this is looking at the performance on a daily basis. As I said, we need to also take into account the times that we're looking at when that daily or weekly performance is actually taking into account. So now let's go to our watch list on the right hand side. Well, actually, no, let's first look at this. So if we're looking at the moment, let's now add a price, and then we get a bit of a clearer perspective or a bit of a better view as to what's actually driving prices at the moment, or what is the whole narrative in terms of price action and those technical levels. So if we're looking at, for example, Bitcoin currently on TradingView or the CME, we're seeing prices at, okay, let me just make sure this is the correct one, price that we're looking at. So currently we are looking, okay, 81,900. So that is correct. Let's go back there. Okay, so we can see here 81,627. And as I said, it depends where you're actually sourcing your data from. But just generally, on a daily percentage, for at the moment, we have seen a rebound in those prices, even though it is still a big change from what we have been seeing previously. For altcoins, there's really been a drastic change, and we can see this in a few indicators, but let's stick to this for now. So we can see, okay, daily it's looking better, but when we turn to weekly performance, we can still see that there's a lot of red on the screen, so it's not very positive. Ethereum, if you're looking at moves, I'm in 11.48% lower. And this is just, from a weekly perspective, we can see the same as Ripple and Solana, Cardano, etc. Same narrative or same sort of, same sort of scenario if we're looking at the monthly performance. And once again, it's still quite early on in the month. Well, we're not even halfway through, and there has been a lot of that positivity that we saw in the Trump rally, or at least with Trump, coming into presidency. We can see that quite a bit of that, or that optimism, has now been wiped out. Ethereum's down 42.86%. So that is quite a large movement. But if we're looking at on a year-to-year basis, there is still quite a bit of optimism that has been coming through, except Ethereum has been one that's really been a lagger. So what I want to go to as well is if we're looking at volatility. So volatility, once again, volatility remains high. And this is really important when we look at what is happening in the broader market outlook. And we're looking at from a liquidity, net inflows, and ETF outflows, we're seeing that currently there is still a lot of volatility, and that is often a representation of fear. So we're getting that market correction. We've had a lot of optimism over the past, with the expectations of Trump coming into power. But not only is this about the United States, but we need to look at what is happening actually in the world as a whole. We've got a lot of, last year was one of the biggest election years in history. And that matters because now we've had German elections recently, we've had Canada, and they are now seeing new party leaderships now, expected to come in. And that means there's going to be a lot of policy shifts and things like that as well, that, on a broader, in terms of the broader horizon and the broader economic outlook, there are now adjustments that need to be made. So that draws our attention. Quickly, we are going to look at the economic calendar, and then we see why there's that uncertainty that is now filtering out into markets. So once again, let's go to the economic calendar and let's look at what happened last week. Okay, so we are, and this is trading economics. So if we go to the previous week and we just look at what's happened there, we can see, for example, Japan already, we can see that consumer confidence, there was a decrease in consumer confidence. And then we are also seeing, okay, the ISM, the services PMI, for the US was actually slightly higher than expectations. But what I want to, okay, we did see the euro, we did see the ECB lowering rates, but that was in line with expectations. And then we got to some Chinese data, and China's economy, remember, this is the second largest economy in the world. If we look at the inflation rate on Sunday, that fell into negative territory. Okay, why does this matter? Well, we need to remember that inflation, even though that's been a main priority for a lot of central banks to try tame the rampant inflation, what this means is a certain amount of inflation is actually positive for an economy, because if there's more demand for goods and services and economic output is increasing, then that means that the economy is actually in a growth phase, and that does lift prices higher. But we can't have a scenario where now prices are rising, wages need to increase. That then has a direct impact on employment and so forth. So it's all about economic cycles, government intervention, and there's a lot of things to take into account. But when we've got the second largest economy that's actually been a manufacturing hub, and that's had, we've seen financial, we've seen a bit of, turmoil in the property market last year. And now we see an increase in those trade wars with the US. And now we are seeing negative inflation, which indicates negative growth. And as I said, for the second largest economy, this now poses other threats to the broader economic outlook. Okay, and then we also had Germany balance of trade. So this is the balance of trade with regards to imports, exports. So it is still actually, we can see that the figure did decrease. So it's still in a surplus, meaning it exports more than imports. And then we saw other data, such as the unemployment rate, and that ticked higher for the US. So we are seeing a bit of signs of, global economic contraction. And this is not even taking into account, we've got all those tariffs now expected, but those haven't really been implemented, or we haven't seen the scale or the effect that it's going to have in the economy. China is now, basically, they've got a 20% levy on US imports or any exports to the US. So, basically, any businesses in the US that have been importing from China are now exposed to that 20% additional levy. And we see a lot of more tariffs. For example, tomorrow, Trump is scheduled to impose those 25% aluminium and steel tariffs. So this is going to have an impact on basically sentiment as a whole. And we do see now a lot of banks downgrading their outlook on US equities. And we see Europe actually benefiting a little bit from the change in sentiment, or basically because the US is now, the dollar is taking a bit of strain. We now see European stocks like benefiting a little bit, and especially with the euro. But now let's go to this week, and then we can focus on what does this actually mean for crypto. So this week, once again, okay, let's go to how data impacts. So we are now waiting for JOLTS, job openings, so more employment data out of the US. Then we've got inflation data, which is a key economic indicator, especially when it comes to monetary policy and Fed expectations. We've got the Bank of Canada interest rates. We've got PPI, purchasing price index, and then we've got GDP data from the UK. Michigan consumer sentiment, which is also a very, very important indicator for, for the US in basically gauging what sentiment is. And then we've got more data on Monday from China and the US. So why is this actually important, and why are we discussing it today? Because if we have to see, or if we have to look at crypto, as I said, there's been that strategic reserve that has recently been announced, and that has actually been signed into effect from Donald Trump. We had the crypto summit over the weekend, and that didn't actually bode well for crypto. So I think we need to take into account that we've had that massive, massive rally. If we look from basically August, let's just look from the low there, and then let's have a look at, what, how some of those moves have panned out. And we can see from August, we saw from August to December, we basically had a major, we went from 49,365 to, back then it was 108,960. So already there, we've seen astonishing growth. And for Bitcoin, this translates into, while it was 120% higher. And then, so that would be for the second half, or basically for 2024, and that was from August. So already we landed up closing the year, well, just from the August low to the December high was a rally of 120%. Okay. And then we got a slight drawdown, and then we got that January high. So from the August low, now this was 123%. So it's been a massive bull run. And then now we see that, okay, fine, things have, the dynamics have shifted a bit, because all the positive sentiment has already been priced in. And what we did get is we had that strategic reserve announcement that boosted sentiment after a downward gap. And then we saw that pain coming into play once again. So what this means is, if we look at from Friday to Monday, we see that there was also another gap lower. So we see that bullish, that trend, that bull rally is now coming under pressure. And that is a warning of, okay, fine, we often say the trend is your friend, but we need to also be aware of, as they say, when has that trend actually changed direction, and where do we go from now? Another thing too, if we look on the 28th of Feb, so that was the end of, it was basically 2 weeks ago. Well, this Friday will be 2 weeks. And we saw that crypto, well, Bitcoin fell below 80,000 for the first time since the elections. And that was the bottom of our Fibonacci, our previous Fibonacci. But now if we're looking at potential moves and we're looking at shorter time frames, we're going to have to adjust that Fibonacci, which may impact the price action, for the interim move. So these are the levels that we are now looking at. On resistance side, we're looking at 81,620, or actually that's where prices are now, sorry. So the 14.4% retracement of that move is 8,545. So I'd be expecting or wanting prices to at least go above that and then hold above that 84,620 level in order to actually maybe boost the potential for a further recovery in prices. So ideally, we want this gap to be filled before we can actually say, okay, the trend, or at least the longer term trend, is positive. So with regards to the summit, now what was that about? So what we had was now the whole executive order on the strategic crypto reserve and expectations of a stockpile that once again boosted sentiment. But then there wasn't that follow through when I think a lot of crypto exchanges and a lot of crypto enthusiasts were expecting a lot more to come out of the summit. But instead, what we had was the policymakers turning around and saying that the stockpile or the strategic reserve is going to be made up of coins that have been confiscated rather than the government actually funding the supply or additions to the stockpiles. So they're not planning on buying more Bitcoin. They're more just using confiscated assets. So we know that Bitcoin or crypto, Bitcoin, one of the key drivers of price action as well, is that it has a limited supply. So that is positive for Bitcoin. But now when we've had a lot of that buying potential from institutions, and now we've a lot of that price, a lot of institutions and the big whales have actually taken profits from, that rise up into the January high. And now we're seeing those catalysts for further adoption and further institutional buying. That is now a bit, it's not really as solid as it was. So now that supply, there's no more. It's not really, if supply is diminishing and demand is still strong, that keeps prices higher. But we're not seeing that in the current environment. And as I said, this is a correction, but in terms of the trend from that August move to the January move, that 123%, if we look at the retracement or the price move from yesterday, we can see that prices, or it's basically over 30%, it was 30.34%, decrease in the value from the January high to today's low. So that technically it is now a technical bear market. So we need to actually be aware of what the next moves are. I'm not saying that there's no bullish, we can see, for example, today we are seeing that there are going to be talks being held about a potential Russia Ukraine peace agreement, things like that, that could still spur bullish sentiment. We can still see an uptick or maybe developments that could actually promote, the risk assets. But at the moment, we have been seeing a risk off environment, which if we look at seasonals and we look at market cycles, March, it's not really, we've had the Santa Claus rally, we've had a very strong past 6 months. It's not unusual to now see, especially, after the presidential elections and the crypto halving, a little bit of a pullback. And then it doesn't mean that sentiment's not going to, increase again. A lot is actually just weighing and relying on those tariffs and whether there's a follow through. So this is the picture that we're looking at the moment. But I think we can also agree that throughout February, for example, we did have those periods of consolidation, and then we have had those, breakouts, but they've been a lot more towards the downside. However, the fact that we've had, with the crypto strategic reserve, we've had a price move like that, it does mean, there's still room. But as I said, a lot of those fundamentals are now already priced in. We did see as well a bit more clarity with regards to those crypto regulations, going forward. And that could spur institutional adoption. But at the moment, it's still a very cautious environment. If we're looking at crypto, let's go to a shorter time frame. And we can see, if we take that same move, okay, let's maybe change the colors here. And let's make this. Okay, let's try do this. I'm not too sure if that's working. But if we look at the shorter perspective or the shorter time frame on the 4-hour chart, once again, this just highlights the gaps, the market gaps. And that's also, if we now look at volatility, that plays a role. And now we saw those gaps, but that upward, those bullish gaps have now, already been filled. And now, in order to boost the momentum, these gaps now, or this recent gap over the weekend, will actually need to be filled. So we've seen a slight recovery in, we've at least seen that big bearish candle from yesterday now actually being filled. So we need to see if we can actually get a push higher, and then we would try to see ideally a hold above 82,675 and ideally above 83,000, and then that may leave the door open for continuations. So a lot on the economic front is now also on the radar. And as I said, tomorrow is a big day because we've got those tariffs of aluminium and steel, and that is a huge industry as well. So if those do go through, then and it's expected to go through. So that will also, we could see more fear, especially as well. We've got that CPI data, inflation data from the US. And if that proves, or if that is going higher, then, we could see a further drawdown especially in risk assets. But then again, that being said, even though we did see a pullback to 76,735, it's still, there's still that resilience, and that gap. Well, we have actually filled that gap now from the weekend after the elections. So that also means basically we've wiped out most of those gains that occurred after the Trump elections. But that being said, we still have this bullish move, or we still had the prior March high for 2024 now providing additional support at 73,100. So it's not all doom and gloom. We do have some space still with regards to that repricing of the Trump elections, that we haven't completely negated that move just as yet. Now, with regards to altcoins, that's a bit of a more gloomy picture. So if we can see, so currently we do see other, okay, so today, once again, XRP is trading higher. We do see Ethereum trying to make a break higher. But if we even look at just this chart, the 4-hour chart, once again, there's a lot of doom and gloom that has been happening in the, well, especially with regards to Ethereum. So even with the expectations of a more friendly crypto environment, the one coin that hasn't benefited has actually been Ethereum. Now, if we're looking, I think the high was here. Okay, so just a rough estimate. If we're looking from the December high, Ethereum is down. Well, if we look from yesterday's low, it was a 57.62% pullback. So I think this is safe to say that definitely Ethereum hasn't been one of those that have benefited from the whole optimism. And I think this gap already back in the beginning of Feb, that was a big warning sign that, okay, fine, Ethereum's taking a lot of strain. So we would need, this is actually a longer term Fibonacci. And this was, if I'm not mistaken, I can't even find it. Okay, let's go to the daily to have a look there. Yeah, so this was basically from the November 2021 high, and that was to the 2022 low. So if we take in that move there, and we look at where prices are trading at the moment, there's that 73.6% retracement, and that has provided some support and resistance. It was previously support. It has now come into play as resistance, at least short-term resistance. So this is also another important level if we are seeing a further recovery, and we would need a break of the 2000 level. So that's what I'm looking at the moment. We can see from the declining or the descending trend line, we have, this is definitely a bear market now, because we've had consecutive lower highs and lower lows. So this is an indication that it isn't altcoin season. And, you know, we will need, I think, further optimism with regards to the broader economic outlook to actually, or we could see maybe other catalysts, for example, like other central banks actually wanting to make stockpiles. That could also give a slight bullish reprieve, but those are factors that we need to watch out for. So that is what I'm looking for today in terms of the economic calendar. As I said, for today, we are looking at that JOLTS job openings, and that is at 2 o'clock universal time. So that could provide additional indication of the US job market. But we've already seen as well the Fed saying that they're not in a hurry to cut rates. So a lot of that, once again, we're not, even though the economic picture is now looking a lot more gloomy, we see the central bank is still sticking to their guns, despite what the Trump administration wants, and they still say that inflation is a key problem and one of the main factors that they are looking at, since the employment or the job market is still, well, it is still at full employment or just above, well, just below full employment. So their full employment is 4% and the unemployment rate is 4.1%. So they still have a bit of wiggle room with regards to employment data. But now with Trump policies and job cuts and everything, we're going to have to see once again what the economic picture or the job markets is actually looking like. And we get a better picture, I would say, in the second quarter of the year. So this is what we're looking at. Let's go to Banter Bubbles just quickly, and we can see, let's have a look at what the stock markets are doing. Yeah, we can see that stocks, once again, if we're looking at the US stocks, it's not a very pretty picture. And we have also seen crypto, also, if we're looking at this for Banter Bubbles, not looking very positive. And this is for today. So there's still a lot of, doom and gloom that is looking, well, going through markets, but this isn't necessarily because of all that enthusiasm we've had. I think a market correction was necessary. The whole thing is, when is the bottom? If we're going to try spot the bottom, that could be very, very dangerous, especially generally, when there is that volatility or when we have that pullback and that change in sentiment where there's a lot of fear regarding regarding recession fears and so forth, a lot of the times the rate at which the markets decline is a lot faster than, the rate at which markets rise. So we need to keep an eye out on that. We'll also be looking, as I said, from a weekly basis. We do still see a little bit of, positivity, but the week has just started. It's only Tuesday. And then from a monthly basis or on the monthly chart, we can see, so something like Maker, RP, those are still trading higher. But March hasn't really been a good month for risk assets, and that includes the tech sector, and that has also been a very key driving force of the crypto rally. So there's definitely a correlation, and there's definitely a relationship between that. So I think on the basically to end off, if we are trying to spot the bottom, we need to be cautious. And in saying that, if we look at, for example, though, if we're looking at even Bitcoin, which we were looking at now, or even if we're looking at something like Ripple, we can still see, even though there have been those pullbacks, we can still see, if we're looking at, some of those wicks, that there's still been a bit of a bullish, when prices are getting too low, there are still signs of people trying to buy in to the dip. So there is still a bit of, buying the dip mentality, but it definitely isn't what it was before. So once again, what I wanted to, just one more thing I wanted to touch on, we can see the global crypto market is 2.21% lower in the past 24 hours. So once again, and that is close to what the levels were in terms of market cap, what the market cap was prior to the Trump election. So we need to take into account that now we are basically at pre-election levels. Things like the NASDAQ is in a correction territory. It is also really, really taking strain. Yesterday's decline saw about 1 trillion being wiped out in markets, in market cap, and a lot of those tech players and a lot of those crypto exchanges that form part of the big US indices or the big US companies are also those ones that have been actually accumulating crypto. So there is definitely a relationship there. And I think we can look at, for example, we'll see tomorrow just what's happening once again. If there is a rebound, what those developments are fundamentally. We can see there was extreme fear yesterday and then last week. So we are seeing that, okay, the fear and greed index yesterday, okay, it was actually a bit lower. But what did I want to see? Okay, but if we're looking at Bitcoin dominance, okay, we can see there Bitcoin dominance has continued to increase. And then with regards to Ethereum, we can see that Ethereum is definitely a lagger. So this, for me, is also a clear indication of the fact that risk now is not in favor of altcoins. But where we go from here, we will have to see. I think tomorrow is a big day, and that will give us more of a better perspective or a clearer outlook of what we can expect in terms of prices and just some of those, the psychological aspects, what we can expect in terms of the technical levels as well, to see how there's overlap. Thanks again for listening, and I will catch you all tomorrow. I wish you a happy day of trading. Just remember, be cautious with regards to risk management, and then we'll catch up tomorrow for more crypto news and analysis. Thanks again.